Paul Ahmed, Chief Investment Officer with BAI Capital. We're going to be talking student housing today. I'm with Sean Baird of Colliers International. Sean has 16 years experience styling student housing projects all around the country. As you know, BAI Capital has a site at FIU within walking distance that we are currently working on and developing. So we'll be talking a little bit about the national trends as well as some trends at FIU that Sean has been noticing. What is the health of the student housing industry at this moment?
We are an absolute flight to safety asset class. We're seeing new investors coming in every day. Primarily, they're moving in from multifamily. You've seen some of the asset classes that have had a bit of reversion in their rate growth to where they're going negative and backwards. We continue to climb. Every single year, we have a little bit higher velocity in our leasing. We also seem to have rate growth every year. We've had exponential growth the last 5 years.
So what has the rent growth been looking like nationwide, and then compare that to, say, FIU?
So nationwide, we're expecting about 3% growth this year. And again, that's following absolute record growth, so it is a little bit tempered. FIU is, the short-term outlook might be, just a slow 2%, but I think that's going to turn up in the next few years. It's a market that's extremely supply constrained and demand continues to rise. So I think you're going to see outpaced rent growth there comparatively to the national average. I'd expect well north of 3% coming up.
So Sean, what about current occupancy trends nationally versus, say, FIU?
So the national trend is a little over 91%. That definitely lags behind FIU. FIU is over 99% average occupancy with, I think, almost all but one property reporting 100% plus. So very healthy market compared to the nation.
Are there any trends you see over the next 5 to 10 years of student housing that investors should be aware of?
It's an absolute flight to safety. Power 4 markets are the hottest markets to go in. I think you're going to see those markets continue to grow from an enrollment, from a rate standpoint, from an occupancy standpoint. It's going to check every box. I think you're going to see some of the smaller schools begin to consolidate, but really those Power 4 core markets are going to become the hottest markets out there. They are currently, everyone wants to be there, and I think it's the safety. You're going to lease up every year, you're going to get rent growth every year, so it's a really great set of markets to be in.
So what would you advise investors as to why they should choose student housing as an investment, and what characteristics do you see that are opportunities for these types of investments?
Student housing is essentially a bulletproof asset class. And I say that because during recessions, more people go back to college. That results in natural demand pressures. And so you see occupancies and rates go up. The same thing happens during a really great economy. During great economies, people have more disposable income and rates and occupancies continue to go up. So we are probably the only asset class that wins on both sides of the economic spectrum, which is really big in today's markets. We've seen a lot of volatility. And our biggest test was probably COVID. During COVID, there's a lot of questions about whether students want to be on campus, whether they're going to return to school, and how we're going to do collections. What most people don't know is we outpaced multifamily in collections. So during that time, a lot of the news was multifamily was the darling. They actually weren't. We collected at a higher percentage rate than they did on rents.
And we both recently attended a conference in Austin. It was the National Student Housing Conference where all the student housing professionals go. And one of the presentations with some of the larger CEOs mentioned that they felt there was about 100 developable sites across all of the major universities. Are you seeing that as a trend? Are you seeing a difficulty in finding good sites?
Absolutely. Core product is the most sought after. The problem is everyone that owns core product will not sell it because they know that it is the best assets at the best locations in the best markets. So if you can turn over one of these sites, which again is rare as you just mentioned, they're gold mines. Everybody will back you. Everybody wants to be there. And if you ever choose to exit those assets, your buyer pool is the deepest out of anywhere out there.
Let's talk a little bit about university enrollment trends. What are some trends nationally for enrollment, and specifically for the public schools here in Florida, and specifically FIU? What are you seeing as a trend for enrollment?
So enrollment trends are going to be broken out into two categories. Again, the Power 4 markets, the flagship institutions, you're going to see those grow every single year. They're going to be extremely strong. That demand is never going to go away. The sub 5,000 enrollment, those you might see a little bit of softness in. Those are the schools that are going to end up consolidating. But the good news is those students are going to still need to go somewhere. So the University of Georgia, the University of Florida, the UCFs of the world, those are all going to continue to be winners. From a Florida standpoint, we have some of the largest universities in the country all located within Florida. Florida State, FIU, UCF, UF, those all continue to be some of the largest universities in the country. They all make the top 20 list every single year. FIU specifically has probably one of the largest in-state populations out of all the major universities in Florida. It's going to continue to experience fantastic growth. Over the last 3 years, applications are up over 50%. There's some legislation that's coming out that's going to push Florida schools to have more in-state enrollment. FIU is the best positioned out of all the major schools to endure that because they're already in the guidelines of where you have to be. It's going to be schools like Florida and some of the others that are going to have to readjust where their demographic base comes from and really start focusing on Florida, something that FIU's already done and is currently doing.
There's been a recent historic trend towards premium amenities in student housing. What are your thoughts on that, and is it worth the cost in the long run?
The amenity deck has shifted in the last few years, where everyone wanted to have golf simulators, movie rooms, biggest pools they could. That was the driver. Today's students are a little bit different. The number one focus is Wi-Fi. You have to have the highest bandwidth possible. Technology is advancing so fast and so quick. Greatest example is, no one really uses cable anymore. It's all streaming. So your Wi-Fi is your number one amenity. Your number two amenity, and which probably shocks people, is study rooms. You have to spend a lot of money on your study rooms. Students, while they love living here, they want a comfortable place to study outside of their main bedroom area, outside of their main unit. So these study rooms have become extremely high tech. They're a blend of large groups with also smaller groups. They want good views of things like the pool, but it's got to be one of your main amenity targets. Behind that, especially in Florida, you see things like a pool. You do have to have a great pool like always, and of course a quality clubhouse that shows well. But I think the days of needing a movie theater or these golf simulators, those have gone behind us. The premium amenities are actually really in the core of the students wanting to be at the school to learn. That's where your money should be spent.
Well, our project at FIU has the latest in amenity packages and is very luxurious. We've got a rooftop pool. We've got a lot of breakout areas, a lot of study areas, a lot of video areas. So at FIU, you'll find we have the latest amenity packages. Are you seeing a developer scale that down lately, given the recent difficulties in trying to make deals work with numbers and the cost of things to build, or are they still adding those high-end amenities?
So I think from the technology front and the study front, you can't scale those down. That's an absolute death toll for your property. Poor internet is one of the number one reasons that students leave, the second reason being poor maintenance. But technology and connectivity drive everything. They want to be able to interact when they want to interact. They want to be able to be private. So you can't skimp on your amenity deck. And when I say that, I mean on the very core factors, the study rooms and the internet.
And that's changed over the last few years, hasn't it, in terms of what students really want?
Massively different. You used to be able to build the best pool in the market and you'd be flooded with applications. It's still important to have something like that, especially in the South and Southeast. But it's the other factors that are driving it even more and more. So as long as you have a good quality pool, lots of availability of seating, you're going to be fine. You've got to make sure you're delivering those core services to your clients.
We were talking earlier about the lack of good developable properties and that there's more buyers than sellers. Are you seeing more construction activity and your clients starting to build, or are they still kind of on a wait and see mode?
So everyone wants to build right now, and they want to build at these core sites in these Power 4 markets. The problem is we're running out of bandwidth for these. So it is a really big flight to safety. They want to be half a mile to campus. They want to be walkable. They want sites of scale. It's why we used to have an extremely large site was considered 1,000 beds. We're now doing 2,000 plus bed sites. And that's because once you get these core locations, you have to put them as dense as you can. You're never going to get more land around these universities. It's becoming a very limited and scarce source. So you just need to be on top of that. And I think if you had more of those sites, our development pipeline would be even larger. We don't build anymore 2 or 3 miles from campus. It's just not happening, except, select cottage product. But if you want that core asset, it's very hard to build only because it's very hard to find.
It seems like there's maybe a dozen or so institutional buyers that have raised billions of dollars in capital. Does that sound about right? And what are they saying in terms of looking for product?
They are very much, I think, aligned with the whole market. Everybody wants core product currently. If you own a core asset and you're willing to sell it, you are going to do extremely well. What we're seeing from those major players is more of a portfolio pruning mode to where they're getting rid of everything that's maybe half a mile plus from campus. Tier 2 markets are starting to dispose of, but the true core Power 4 markets, no one wants to sell their product. It does so well out there and the rate growth is so good and the leasing velocity is so good. Nobody wants to sell them. Everybody wants to buy them, but no one wants to sell them.
So if we complete FIU and you sell the product, is that a property you think that would sell at a low cap rate and have a lot of investor interest?
Yes, extremely high investor interest. Again, you're at one of the best growth stories in the entire country from just a school standpoint. Your acceptance rate is extremely low. It's a little over 50%, so that checks a very big box. There's very limited online learning, a lot of in-person, on-campus activity. So it's hitting all the metrics that everyone wants. Pedestrian, walkable site, you're going to get a very compressed cap rate compared to most other product out there.
There's been a lot of talk about interest rates lately, and for people in commercial real estate and student housing, cap rates. How do interest rates affect development and supply as well as cap rates, and where do you think those are going here over the next few years?
So I don't have a crystal ball. Interest rates are probably the most powerful dynamic that none of us can control and we're all at the mercy of. Interest rates have definitely gone up over the last few years. It has resulted in cap rates expanding out. For a short time, we were seeing lender spreads going wider as well. We saw over, about the last year, we saw interest rates come down, lender spreads come in. Now there's a little bit of economic uncertainty, so they're starting to move up again. The one catch with interest rates is they expand much faster than they contract. So I think our short-term outlook is, we're probably moving closer towards maybe a 5 or 10-year money around a 6% rate. I don't think that's going to be hold. I think over the next few years, we'll see that come back down closer to about the 5% mark, which would be a very healthy market. But in the end, it's 5% or 6% money is really cheap money when you look at our historical interest rates and where they've been.
So one of the questions we get from investors is they look at, for instance, our FIU project, which will ultimately be a $200+ million project, as how do I get my investment back? Maybe share a little bit with the amount of sales volume the last few years, how many billions of dollars it is, and that really, although 200 to 250 million sounds like a lot of money, in the whole scheme of student housing sales, it's really not.
At one point, we were probably much higher in sales volume, probably about 12 to 14 billion. Interest rates went up, that tempered us down. We came down to probably about 8 billion in annual sales. That's two factors. One, availability of product. As I mentioned, core products not moving. Deals like yours, 200 million plus, is an absolute feeding frenzy. Everyone wants scale. If you talk to any buyer, it costs them the same amount of back-end dollars to put out a $20 million check or $200 million check. So naturally, they want to write a bigger check. Their cost of capital and their back-end costs to get the deal done are fairly stagnant. So it's easier for groups to write the larger checks. They also want to write the checks. They'd rather move that much money than have to find 10 other deals. Scarcity is everything. We don't have the huge amount of available product that I wish we did. If we did, everyone was a seller right now, I think we'd be at 20 billion annual in sales. It's a flight to safety. So everyone who's coming into our market and who's already here does not want to get rid of these high quality core assets. They recognize that you can't match our rental rate growth, you can't match our leasing velocity. No matter what asset class you look like, they all fall short in one of our aspects that we check every box in. So because we're such a flight to safety, we just don't have enough sellers. Lots of buyers, but not enough sellers.
Great. Well, that's good news for our FIU project for sure. So I think that about covers everything. Again, our project at FIU will be breaking ground later this year. I think as you just heard from Sean, there's going to be a tremendous amount of demand for buying that asset once it's completed. And if anyone has any questions, feel free to reach out to our investment sales team. Again, thank you for listening.